Weekly options expiration. It's been a very nice day. One of the things that we're going to highlight is the S&P 500 weekly chart. And what we're going to say is that the 2012 calendar year has started off in January in a bull rally. We have that bull rally. We have a rising 10-week. We have a leveling off of the 50-week moving average. So that means that everything that had happened over here last year with Europe and all the other stuff is that now the market is clearly discounting that, and earnings season has been in play. But let me caution people on one thing. Bull rallies, or the beginning of a new bull rally, has to have the test of where that bull rally may or may not be. It started over here at the bottoms where we called them, and we called them back over here because we have all the live videos to prove it. And we said that 1075 on the S&P would be it. Now, you had the rally start here, but you did have a test. And then you got up here. Now, when calendar 2012 has clearly started, the bull rally on low on balance volume weekly has played its course right to a major weekly resistance level. Okay? And today was a first calendar monthly options expiration. That too was a bloodbath because you can see what happened to the 420 calls that expired today. Went to 5 cents, 7.75 to 5 cents. Yes, I'm just giving you a little bit of a recap on what happened with some of these options. The Google options, as you can see, marked down to $55 on the people who had the 580 call in the money. Okay, this is just a few little highlights here. Not only that, let me tell you another thing, that in this side of the market, they took the 585 calls that were down. You can see that these were down. There was 13,000 of them traded today, but you can see they were down $53. And people got taken to the woodshed. So yesterday's close was 53.85, and today's value on monthly January 2012 options expiration, 10 cents. You have a lot to learn for the innocent people that are watching it, and even for the so-called professionals that get caught in these things and can lose a lot of money. Maybe you need to call us, because this is pretty devastating on how markets can manipulate people down to 10 cents. That was an earnings play there. But the Apple calls over here, again, the Apple calls over here that were 7.75 on the high went down to a nickel today. So having said that, let's go back to the S&P 500 chart. That was today's highlights. We are reaching an overbought level, and we can, within the bull rally structure that has started off the year in this 3 weeks, is that you will go up here. I will draw a trend line for you. And here I'm going to say that this top pattern right here, 1330, let's just call it 1332 on the S&P up here. And at that point, you're going to exasperate and start getting top end heavy on the index, which would suggest to us that every new bull rally has to have some volatility and pullbacks so that other people can get in. That is a true story. So what I'm telling people is that the S&P, if we were to get a pullback, we know that it's got support at 1267.83, and that will change on a daily level, but that would be your first pit stop. We also know that right around the 1251.75, 1253 area is that you're going to have support at that lower end of that market irrespectively for the bull. And ultimately, a really good shakeout would be to bring that S&P down 100 handles to right around that 1230 area, really. We would like to go up and hit that higher end, have a reversal. Then just remember though, bull rallies have pullbacks. It's when you get the pullback is when you want to use the time to get into the market. Let us not buy up at the overbought areas, but look, because we're going to hit the wall of resistance and it starts right over here. MMTs. Not only that, the all-time high reversal in calendar 2011 was, once again, I will show you with the zoom tool. And the zoom tool will bring you over here in this period, meaning that that S&P has a big old top up here where it all started. The whole thing. And at 1500 you're up there, and most recently you have these tops to look at right here. And once again, I'm going to draw a horizontal trend line, and I hope it's helpful and whatnot. Let's take a look at that tool, trend tool. Let's go right here to that top. That's 1426. But about half of that range in there is about 1403. 1368 is where it broke. And not only that, when you take a look at the calendar high over here, when we came up in that rally, and we called that big time short back in the end of April going into May, is that was the top, and it was up there where we call that 1370 handle now. That's going to be the challenges right here on this January 2012 bull rally, 3-week bull rally, because when you look at it clearly, that's where the big reversal started over here. Now, having said that, there's some other areas, and I just drew a trend line at 1377. Okay? Now, having said that, let's go back over here. Let's go back to the zoom tool, everyone. Here we go. Now, let's take a look together over here. This is going to be the wall of resistance. All these weekly trend lines. And I'm just going to put one right there because that's where one needs to go. Now, having said that, we're right up here at the ceiling. When you do put in a top, where it gets top end heavy at resistance levels, is that price action will diminish up toward the highs, and there would be a round of profit taking that would suggest to us, as always, within the next 3 weeks, there's going to be some profit taking, and there's going to be some downside volatility the more shorter term overbought we get. You can only go so bought, get overbought so far before you have to have a good shakeout. So, knowing that you've got a calendar bull rally in the first 3 weeks to major resistance levels, we know where the upper trend lines come from and at what periods of time and what their numbers are. And not only that, I'm going to put one right there because there's going to be some resistance right up there right below that 1325 handle on this S&P. But remember, on a weekly level, through the 3-week level, at this weekly level, we're going to end up in a cautionary zone for the people that have already started to buy and hold. Most people haven't been in the beginning rally, and they're waiting for pullbacks and earnings seasons in play. However, that's the S&P 500, the Dow Jones coming back to all-time highs up here. Look at that. 12.7. Look at the 3 weeks. That's a bull rally right here in the Dow Jones. Let that be known. And you can see where that rally has taken this weekly movement right up to a level that people better be concerned about, because I'm going to tell you that in the shorter term of the calendar year of 2012, that you're about ready for a pullback. And so if you're not in the market, don't buy at the high. Rather, wait for pullbacks that would show you that you would have a lower risk area. So we're going to tell people here that on the weekly Dow, that this Dow Jones in the first 3 weeks have gotten an overbought process. One of the things that we'll be happy to tell you is that the Dow will have a pullback at some point. Every new bull rally does. And it's a bull January with a very overbought Dow. And the more overbought you get, they're going to have pullback and corrections. So you would want to short the high and then buy back the dips and do your shopping list and find out which ones have reported the best earnings. Bullish chart. Here is a trend line on the Dow. I'll be happy to show it to you. Right at the top, right here, we are extending ourselves from this last weekly breakout. That was narrow range, indecisive. And here, you have ran this far in a 4-week pattern. Yes, this is the new year, but look at the top end up here. It's getting overbought. Not only that, we'll be watching for support levels that would hold the Dow would be 12,000. 1125, let's say. Let's also not forget that when things get overbought, they have to pull back. And we're going to go into next week's earnings and thereafter, and all the good news from Europe and everything that people are going on right now have entered an area that you're overbought on the Dow. And not only that, you're overbought here on the NASDAQ comp. I can tell you right now. It can go a little bit higher because the NASDAQ trades a little bit different, but they have a bull rally in play that would need a pullback. All bull rallies have to have pullbacks. They could come, but generally when they get in the overbought area, they can stay there for a period of time. NASDAQ 100, right up here at the ceiling of that trend line. And is it overbought as well? As far as the NASDAQ 100 goes, it's top in an area of resistance. However, you can continue to move higher. You're up here at major tops right now. And whenever you're going to see tops taken out to go to the next level higher, what you're truly going to want to see is a very powerful move with lots of buyers and heavier volume. So you want 3 times average normal daily volume when you go through resistance. Once again, that has been the update. And once again, that has been the story on Friday and what happened to a lot of names. ISRG tanked. It was a great buy down at the bottom. That's where markets were made. Okay? And it had a great earnings report. Lots of stuff were going on.